Okay, great. So thank you all for being here. I can see there's a lot of folks on the call here. I think scrolling through some of the pages. So it's exciting. Rivka and I have been thinking about this class and brainstorming together for quite a while. So it's exciting to actually be here with you and share this information we have prepared. For me, for those of you that don't know me, my name is Malcolm Berman, and I teach classes on the stock market. And I love the stock market. The reason why is that just for my wife and my family and us, it's sort of given us more freedom, more options and choices. And at one point, we were petrified of the stock market. So to come all the way from there to where we are now sort of says to me that these are things anyone can do. So it's a tool that, as I will share with you here today, that I think can empower a lot of people's lives in a very positive way. And so it's a great topic. And I think that there's just so much sort of misinformation, confusion about the stock market, about the market going up and down and the volatility that scares off a lot of people. And actually with some fairly basic principles, several of which we will share tonight, you actually can understand the stock market with a lot more order than you might actually have thought coming into this tonight. So with that little out of the way, I want to introduce to us someone I think many of you already know who's created an amazing Facebook group, and I think has personally helped me in my life, and I think many of you as well. So Rivka, if you could maybe just unmute yourself just to share a word or two, would be great.
Hey everyone. First of all, I'm really excited also. First of all, as many of you know, if you've been following the Facebook group, I love the stock market also, and to find someone else who's as excited about it, who is knowledgeable and who is able to teach it was really amazing for me. So I'm really thank you, Malcolm. I'm happy that I found someone else, because I do not have the capacity right now to take on teaching this class. So it was really amazing to find someone else as excited as me. Unlike many people, I actually made my first investment when I was 18. I waited until my 18th birthday because I wasn't allowed to invest before then, and made a stock market investment. So sometimes when we're 18, we sort of think like we own the world. So it was scary, but possibly less scary than it might be for other people. So that was sort of my intro to the stock market world. And then I did a course at Bar-Ilan at one point to become a licensed investment manager. And I remember when I started the course, I was like, okay, I'm doing this, but I'm never going to invest in Israel. Terrible place to invest. I sort of had heard this, I guess. Because my first stock market purchase was actually in the UK and not here. And then I learned about the Israeli market, and I understood, you know what, like there's a lot to offer here, there's a lot to offer abroad. But the main point was that people need the knowledge. My daughter started Shirut me last month, I guess, and she came home. She's working with very underprivileged children from underprivileged families, and she came home telling me something like, but these kids aren't going to learn, I don't remember what it was, and they're not getting exposed to something, and they're not going to know it for life. And I was like, this is not just them, and it's not just whatever topic it was she was saying. I'm saying this is everything. If we're not exposed to knowledge, we don't have it, we can't use it. And when I meet people, when I'm doing my financial planning and financial consulting, and I say to them, oh, we don't know, we don't understand. And it's a shame, because they're not giving their money the opportunity to work for you, okay? Not just you work and sell your time, but rather have money work for you. So that's my philosophy about investing a little bit, like just excited about it. It allows your money to work for you. But yes, we need to understand it and we need to know more. So I'm just excited that so many people showed up for this class and are interested in the course that Malcolm will be giving. I'll be in and out. If anyone has questions, obviously Malcolm can take them, but I'm also happy to take questions, follow up, whatever. Have a good evening, and over to you, Malcolm.
All right, great. Thank you very much, Rivka. So, let's just dive straight in. Let me share my screen here. Okay. All right. Okay. Oh, let's see. Okay. All right, great. One last thing. Okay, fantastic. So welcome everyone to the stock market investing course, partnership with Living Financially Smarter in Israel. The goal of this course is to help everyone to understand how the stock market can actually help to pay your bills. It can help you to fire your 9-to-5 boss if that's what you want. That's not what everyone wants, but essentially to give you more freedom. Maybe that means scaling back at your work, and just in general to create more choices and options for people in their life by having more financial abundance. So if we do our job correctly, you'll actually have the practical skills and tools and a roadmap to start doing this for yourself. And I think that actually what this comes back to a little bit is that in many ways, life kind of sets you up to be poor. Many people are not taught financial education at a young age, just like Rivka was saying. And in many cases, especially if you're from America or different countries as well, but like you can come out of university with student loan debts. Then all of a sudden you want to buy a house and you have a 30-year mortgage and you find yourself actually a slave to your job because you have to pay for these assets. You buy a car, there's car payments. All of these things essentially make it hard to generate and build wealth. And in this class, what we want to do is actually take that system and turn it around to help you make money. So, all of these companies that are selling cars, we want their success to help bring us more abundance. Real estate companies that are selling the houses that we're buying or apartments and things like that, the stores that we are shopping in, all of these companies are making money, and we can use the stock market so that as they are doing well, it also helps us together. So if that sounds interesting, this essentially is an investment roadmap to that. And just before we get into the actual content, I wanted to see whether just a few people, just for a minute or so, would like to even say maybe what their goals are, what their hopes are for this class. In my situation, for myself, and some of you maybe know me and my wife, Keiko, we sort of were interested in the idea of not having to wait until we were 65 to retire. So maybe that meant scaling back on our jobs earlier in life to work more part-time, have more freedom. Her family's in Japan, mine is in the States, have that flexibility as well. So if anyone would like to share just a sentence or two, feel free to unmute yourself, just what you're looking to get for the class, out of the class, for any brave individuals.
I'm actually looking for ways to get into the crypto market. I've been investing since I've been, I was about 20 years now. And yeah, now I want to diversify in this crypto arena, and I'm trying to figure out best ways to do that.
Okay, we will talk about crypto. I think it is an important topic and there's less information about that. So that makes sense, and it's definitely emerging.
I'm happy to go.
Sure.
So I've just I've got some money in, like a 50,000 shekels, and I'm going to put it in investment brokers. I want to start investing, and literally it's going to be like happening this week, and I'm really keen to get ideas about how, I'll have somebody helping me manage it, but obviously I want to learn enough to be able to manage it myself.
Yeah, it makes sense. Just have the tools to actually, you can understand when people are giving you advice, whether it's helpful or not based on your own needs, and have the ability to manage your own investments for life.
Yeah, thank you.
Sure. Maybe one more person?
Yeah, I'll share.
I can go ahead.
Okay. I for the past number of years, any money that isn't currently in use is just sitting liquid in a bank account. And I kind of know that as a dual citizen, there's all these, interesting tax implications of, do I invest in Israel? Do I invest in the United States? I don't want to end up putting in a huge amount of work and worry and running a large risk. And then rather than getting the whatever return that would make sense, I would then get only half of that return because I lose it to dual taxes and things like that. So that's sort of become just a block of, I know there's a boogeyman, and as such, I haven't touched it.
Got it. Yeah, I think what you're bringing up, I chatted with a few people ahead of the class, and the idea of like what the implications are for different types of investments, what the tax rates are if you're a US Israeli citizen, what that means, and also avoiding management fees, which actually can cut into a lot of your earnings if you're not sort of careful about it. So we'll totally cover that as well. Not all in the first class, but that is part of the scope of the course for sure. Maybe one last one.
Yeah, so I'm interested to learn about options, puts, calls, features, bonds. Obviously, I could read about this on Google, but a bit lazy. So if you could share a couple words about this. Thank
Got
you.
it. Okay, sure. I think some of those things we will definitely get into. I think some of the things in this course, such as options and futures, will be less of the focus, although we will talk about specific strategies that can also be put into play for those things. I think you'll even see some of those today here a little bit. So, okay, cool. So just to give a little bit of background about Keiko and myself, and also just to give a bit of context on the content of the course. So just to share a bit of our background. So for those of you that have not met Keiko and myself, we met, I was living in Japan, in Tokyo, back roughly 15 years ago. And I remember we met there, and I remember the experience of sort of like riding around as sort of young adults on scooters in Tokyo and looking up at like the neon covered billboards. And it was kind of like living in an adult Disneyland. And we went out one night and we met this guy, Ken, at a bar. And we talked to him, we got introduced, and he told us that he was living 3 months of the year in America and 3 months of the year living in Japan, using income from passive income from his investments. And essentially he had time freedom, money freedom, and location freedom. And for us, again, this was like 15 years ago. It just like blew our mind. It was a kind of life that it was so attractive to us. And for the first time ever, there was like someone in flesh and blood in front of us that was actually living it. And it gave us this spark of inspiration, not that we had any idea how to actually achieve it, but sort of saying that there's something nice there. How do we get closer to that? And I remember at the time, though, we were essentially kind of like in like a financial dead end. I was living in Japan and I was an English teacher. And no matter what I did, I had a salary cap of $30,000 a year. No matter what, there's no raises or no this, that was it. And my girlfriend at the time, my wife now, Keiko, was working 2 waitressing jobs. And it was sort of like we scrambled together money, and we were fairly decent savers. And we thought, you know what? We're going to try and put it into the stock market and try to earn some kind of passive income. So what we did is, the year was 2008, if that rings any bells for any people in particular. We put our money into a stock that was later referred to by some as the worst stock of 2008. It was Washington Mutual, which is a company that no longer even exists. It's a banking stock. And we bought it here. We bought it up here. And we were holding it all the way down here until it finally went bankrupt. And I remember I had a brokerage account at the time. I was basically clicking refresh on my brokerage account and seeing like months of savings just evaporate into thin air. And it's sort of like, there's no one you can even like yell at or get like upset about. It's just the money is gone. And we felt like gutted by it. It was just like, it was devastating to see all that hard work and that hope just crushed. And it made us just, kind of feel like that dream of having financial freedom is just like, we're a joke. There's no way we're going to get that. That's for sort of a different tier of people, or it's just for a league that's beyond what we could do. And I think that from that experience, we basically were frozen by it. It created a very strong fear of stock market crashes and made us very risk averse. It also made us psychologically just think, like what are we, imposters? There's no way we can actually do it. And the third thing was that we had that vision from Ken, but we had no roadmap. We sort of understood he was investing, but we didn't understand how. And we picked this stock, and it clearly was a very bad choice, and we weren't diversified. We made many mistakes, but we had no roadmap, so we just didn't know where to go. And it kept us stuck for a long time. And then flash forward to about 2 years, and at the end of it, we lost 75% of our money. which I hope no one experiences that because it's not pleasant, although you do learn a lot of lessons when you lose that amount of money. Flash forward to about 2 years later, moved to San Francisco. I had got an MBA at the time. I was working at Sony PlayStation, so I had a good job. Keiko was also working in a good role. So we had stable jobs, quite a bit better than what we were doing before when we were in Japan. And we reached a milestone. For the first time ever, we actually were able to save $30,000 1 year, which for us was a very big deal. And on one hand, like it was very exciting, but on the other hand, I remember one night I was in our 1-bedroom apartment in San Francisco, and I was like lying in bed and I couldn't sleep. And I was just thinking about, if we saved $30,000 a year, which was a big accomplishment for us, it would take 33 years to become millionaires. And that's not to think about if we want to have kids and the cost for that, if we want to buy cars, if we want to have a house. And it just didn't make sense. On one hand, it felt like, we are now in a better track in terms of we have more education, we have better jobs. But at the same time, I felt like we're not any closer to that actual vision that we saw from Ken. And it felt unfair. And we were just, bitter. And our money was sitting in a 1% savings account because, there's no way we're going to put into the market and risk that kind of thing happening again. So we're just sort of sitting there. And then I remember one day we were on our way to work. We were carpooling, actually. We heard something on the radio or on YouTube or something about a UPS worker, a delivery worker who made only $14,000 a year. And he died with $70 million in his bank account. And hearing that, it just like our mind was blown. Like, how does that make any sense at all? The math just did not make any understand. We could not understand it. What we learned from that was actually through investing your money in regular vehicles in the market, things like the S&P 500, which is the 500 largest companies in the US stock market, or things like the NASDAQ, letting your money compound over time can have a dramatically bigger effect on building wealth than either of us anticipated. So from this, all of a sudden, we started to dive into this more, and we started to understand a little bit what the roadmap could actually look like, because we didn't understand, how do we build towards that life? What are the actual practical steps? And I remember all of this psychology that was in our head and this noise about, we're a joke. We lost all of our money in the stock market. There's no way we're going to be able to turn around. It's not for us. By going through this process, and I'll share specifics tonight about it, it turned the conversation to just, it was an equation. We need to understand for financial freedom, how we can have our passive income from our expenses be equal or greater to our living expenses. So it was much less about this will never happen for us, or are we worthy of it, or whatever. It was, how do we get to this number? How much do we need to save? How much do we need to get from the market? And it really made a lot of the psychology that was holding us back much simpler, because anyone can do it. And I will show you, anyone can do it. The other thing that was also interesting as part of that process was that our money value started to shift. I grew up in Southern California, and I grew up it's a suburb, so there are like large houses or whatever. It's just the typical kind of thing. And so naturally, I always thought like, I want to have a big house, or I want to have these kind of things. And then something shifted where we thought, would I prefer to have a more expensive house than I can probably afford? And that means 30-year mortgage with very aggressive payments. Would I prefer actually to have a more modest place where instead I have, I can work part-time or retire early, or have the freedom to travel and sort of live as we want? And these things started to shift. I thought, do I want a fancy car? Would I prefer to be able to do, again, maybe it's leave work earlier because I don't need to put in as many hours or have less obligations, so I can spend more time with our kids. And it just became so clear to us that the value from having work freedom, time freedom, and location freedom was much more attractive in our case. It doesn't have to be for everyone, and that's fine, but to share that some of these trade-offs were very interesting. So we had the roadmap all of a sudden, and we actually had the noise in our head that was stopping us also was starting to evaporate. So we finally got back into the market. And in 2015, we started put back in, and the Chinese stock market crashed, and it dragged down with it the US stock market as well. And I remember thinking, like, it's like, this isn't fair. What is going on? Like, how can this be happening again? And it's almost like post-traumatic stress disorder for anyone that's risk averse and is worried about the crash of the stock market. It's like, it's just like, oh my God. But from the prep that we did and the things that we learned and built up to that period, all of a sudden we were prepared. And we knew how to actually do things like, first of all, diversify. Instead of buying just one or two stocks or one or two sectors, have a more diversified portfolio. We also learned how to things like buying the dip, also how to hedge when the stock market's going down. And we put into place all of these tools, which again, I will share them with you. And as a result, we actually profited more when the stock market went down in 2015. By the time it recovered to where it was, we actually profited more from that point than we lost in 2008. And for us, this sort of took that fear of stock market crashes and broke it. And was a very empowering kind of situation because, as we'll see in a minute, there's a lot of misinformation about crashes that keep a lot of us stuck or paralyzed. That actually is not the case, and crashes have a very good potential to actually be large opportunities to generate wealth. So from that point, I actually just wanted to share quickly, and then we will go into some details. I wasn't sure if I would show this, but I think that actually, just to be totally transparent, so you guys can see, this is actually our accounts. This is our U.S. brokerage, and how it's done over time. I don't want people to think, okay, you're talking about stuff, but are you actually doing it? These are the numbers from our account. So, like, for example, 2017, this is the amount that we cashed out of the market that year in profit. 2018, that number went up. 2019, it was a much more modest number, which is also very important to say that it's not just a simply linear path. It is going up and down. It's like waves in the ocean. That's what you need to expect. That's the nature of the market. In 2020, COVID came, and COVID, obviously, if people were in the market, it was a very good time to be in the market. So the returns really started to grow. And 2021, so I say this because the compounding effect of your money can actually really surprise you beyond what you might expect. And we'll look at some scenarios in a second. And then there's also crypto, which I think we'll discuss that is a part of it should be a part of most people's portfolio to a certain extent in a safe way. But so with that, the result of it was the way we thought about financial freedom was, again, like how we can have more time freedom, location freedom, and financial freedom, work freedom, sorry, as those components. And so as our journey continued, we sort of thought about how can we make enough passive income to create half a salary, a full salary, 1.5, 2. Those were our milestones. And in late 2019, we reached a point where Keiko transitioned from working full-time to part-time from because of the passive income. And in early 2021, this past year, also I transitioned to work from full-time to part-time. And I'm doing this as also just on the side a little bit, but I don't want to say that we're never going to work, because that's not true, but just having the freedom to actually explore other things was sort of our goal. And so to share how it kind of developed. The thing that even as people are on the steps to this path that are very interesting to note is that even things like when your money starts to earn money for you, it changes your perspective. So things like, working really hard at work to get a raise of 3,000 shekels becomes much less relevant when all of a sudden the stock market is actually providing you a second income stream. Dealing with drama, letting it affect you at work, BS at work, all of a sudden there's a sensitivity that is no longer as prevalent because you're not as reliant on that. It's just sort of a nice side effect that starts to develop. And also the feeling of quicksand, because what you will find is as you grow your wealth, the amount that your wealth is generating for you as it starts to become bigger ends up doing most of the savings for you. It takes a while to get on that path, but everyone can get on that path. And even if you're beginning and all of a sudden you make $100 in passive income for your first month or whatever, that still is amazing if you've never had $100 in passive income before. If it's 1,000, if it's this, all of these things will just help give you more freedom. So with that, I want to actually talk about the subject that I think is on a lot of people's mind and is the thing that stops a lot of people. And also I'm gonna, because this is a big group, I see that there's 95 people and I'm sort of happy because Zoom capped the meeting at 100 and I was a bit worried that whether we'd hit that threshold. But I will take questions as well. I'm not trying to not do it, but just because it's a large group, I'll probably end sections, then open up to questions after. So, you know, I mentioned before the three things that really stopped us was one, not having a roadmap, not actually understanding how to achieve the goal we had. Number two is the psychology of just thinking, you know, it's, are we this, are we that, as opposed to understanding it's just an equation. And number three was fear and trauma from stock market crashes. And if you ask the average person on the street why they're not investing in the stock market, the big reason is they fear the crash. Even of Americans, 80% of them do not invest in the stock market. More invest through their 401k and their retirement, but the ones that are actually taking their own money and putting in, it's 20%. It's a very small fraction, and it's because of this fear. So what I want to do is really look directly at these crashes and see how bad they get. Okay, so stock market correction. So for anyone that's not familiar with this term, what this is this is a drop in the stock market between 10 and 20%. So again, if I have $100 in the market and it goes down to $89 or to $80 between that gap, that's a correction. So you'll hear about their stock market corrections going on. The market's almost in a correction period now. They occur once every 2 years, just so we understand the frequency. It's not that common. And the duration is that they last on average for 5 months. So the only real danger is that if you need your money back in a short amount of time, that is where it becomes risky. So if you have your money in the market and there's a correction, it's obviously not pleasant, but again, there's opportunities to buy when a correction happens. If you can wait on average 5 months, the market will correct itself back. That is a reality over the last 90 years. Now there's bear markets. So bear markets are the less friendly cousin of stock market corrections. This is when you hear about stock markets crashing and they go into a bear market. So what does that actually mean? It's a drop of 20% or more in the stock market. So again, if you have $100 and it goes down to 80 or below. And when I say the stock market, what I'm referring to is usually an index of the market. So that would be something like, we mentioned the S&P 500, the 500 largest companies in the US, or the NASDAQ, that's the technology sector of the stock market. That means that that whole group has, as a group, gone down to that level. We're not talking about an individual stock. If Amazon drops 30%, the stock market is not in a bear market. It's if the market as a whole does it. Okay, so on average, the stock market, when there's a bear market, will drop by 33%. So you know, you have that $100 and it goes down to $66, $67. That's clearly not so pleasant. The thing that's very important to be aware of is that a bear market occurs on average once every 6 years. And again, this is taken from the last 90 years on average. So the thing is that if you Google at any given time, you will probably, about the stock market, you'll probably see some articles saying, oh, it's the stock market crash coming, is a correction coming, all this stuff. One of the reasons why that happens is because people click a lot more on scary stories and out of fear than they do out of stories about, the stock market is wonderful. These sites, partially, I mean, they're not partially, I mean, they're funded by the number of views they get, which helps them get ad revenue. So they need to create articles that will get clicks. I'm not saying none of the information is accurate, but what I'm saying is that you will always see a high volume of these things because they get clicks. So you shouldn't misrepresent that with actually what the reality and the facts are of bear markets and corrections. And on average, they last for 14 months. So again, the real risk is if you need your money quickly. So anyone that's looking to invest in the stock market because they want to pay their rent next month, I just want to be transparent that is a risky thing to try and bank on. I don't recommend if someone cannot, if they do not have a time horizon of at least a year with the stock market, they will just be taking on more risk because no one actually knows that the market's going to go up or down. But you do know that on average, if it goes down, it will recover over a certain period of time. So that's the worst of how it gets. Now, the upside, which is the bull markets. So the bull market is when the stock market is going up. The average bull market lasts 4 to 5 years. This is fact. The stock market goes up 71% of the time. I do not gamble. I do not feel comfortable gambling. It's fine if you gamble. Because to me, the idea is, the house always wins. The stock market, 71% of the time, it goes up. If you're in the market, that is, you are on the side that is going to win if you have time on your side. The previous bull market before Corona lasted for 11 years. So if you put your money in the market, it was going up and up. Of course, there were some corrections in between, but that's an amazing ride to ride up. And the average gain from a bull market is over 100%. So just looking at this objectively, this was part of the information that we found out that helped to suck out that fear of the markets as the beginning of that feeling, is that, a bear market once every 6 years, you risk 33% loss. Bull markets, 4 to 5 years, increase by 112%. You can see here on the graph below also just visually the amount of time, the length that these different phases last on average. So just to look at the actual crashes that have happened in sort of recent history. So this was the Corona crash. Second. Certainly drew on this, but we'll survive. Drew again. Okay, let me try not to do that. Okay, so we have the S&P 500. So it crashed. This was February of 2020 when Corona was really a lot of uncertainty, and it took 6 months to recover. So this is quicker than the average crash that we saw for a bear market. That's 14 months. The NASDAQ, the technology sector, recovered in 4 months because a lot of money went to technology companies like Zoom, Shopify, Amazon. A lot of them benefited from work from home and people buying stuff online. Wow, I don't know why this is doing that. Let me stop it. Okay. Okay, here we go. Thank you for bearing with me there. Okay, so in 2018, there was a correction. What happened at that time was Trump was having some trade issues with China, and it brought the whole stock market down. So that one, it lasted for 7 months. And then it also, here you can see basically the timing was the same between the NASDAQ and the S&P. And then the China stock market crash, which I mentioned a little bit ago, that one was for 3.5 months. So again, these are the most recent crashes and corrections and how they actually played out in the market. So the real question is not how much you have to lose, it's how much you have to gain by being in the market. So the S&P 500 over the last 90 years has had an average return of just under 10%. Again, this is fact. This is with World War II, the dot-com bust, all of this stuff, that's still the average return. In the last year alone, the NASDAQ was up 38%. Imagine giving someone $1,000 and they come back a year later and they give you 1,380. If I knew I could count on that, that's incredible. Of course, that was a very high return year, but you will have years that are like that. But this average is what we need to look at as something more typical, which is still very good. Way more than any savings account you're going to get anywhere. Okay, so we can see the graph of the S&P over different periods, 10.7, 9.6, 9.99. And then the NASDAQ over here, you can see actually in the last 10 years, the return's been 15%. And over the 15-year period, it's been 10.9%. And NASDAQ has 20x'd itself in the last 30 years. So again, if you put money in the stock market, you put $1 in 30 years ago, it's worth $20. It's these numbers, how they compound on themselves are insane. And last year alone, it had terrific returns, as you can see. The real fear is actually not being in the market because housing costs go up, inflation goes up. All of these things are happening, and the stock market is one of the best and most accessible ways to increase your wealth and grow it. So I talked about that delivery man that turned 14,000 into 70 million. And the idea was using things like the S&P and regular vehicles, not putting all of your money into risky penny stocks, or a large part into crypto, or into options or things like that. Not that there's no place for that, but just as a general thing for most investors. So what I want to do is actually share with you something, and I'll also send this to you because I want you to run these scenarios yourselves and see how much wealth potential you have to create. So scenario one, you're 30, your current savings, you have $25,000. You never add any more money to it ever. We assume that you're going to get the historical S&P 500 return that anyone in Israel, I will show you, you can invest in this. There's no extra fees or anything. Anyone can invest in this. And we assume that you're going to be taxed. In Israel, the tax rate is actually 2.5%, or sorry, 25%. So the return would be around 8 or 7.5. Okay, so I want to build this together. So I have this sheet here. Okay, so the person's 30 years old. Put in the age here. They have $25,000. You say they're not going to, here we'll say, you're not going to save any more money for the rest of your life. You're just going to put that in, and you're not going to increase that per year. So for example, you can run a scenario and say, each year I'm going to save another $10,000, and I'm going to say that it's going to increase 1% a year. Let's say you put in 25 grand, that's it. Your investing return rate, 10%, and we'll say taxes are 2%. That money, we scroll down here, this is the short version, this is the yearly breakdown, this is in 10 years. That money in retirement age by 70, you put in 25 grand, you never touch it, it turns into more than $500,000. It's crazy how much money will compound over time. We see here, 25 grand, 543K, it doubled 22 times, just putting it into the S&P. There is no maintenance. Scenario number two, you're 30, you save $100,000, you got a good amount of money here, and you're gonna put in $15,000 each year, and you have the same return. So let's see. We said we're 30, you're gonna put in 100K, okay, and we said we're gonna put in 10K a year. Okay, we have the same 10%, and we assume that there's going to be taxed at 2%, although in truth, you would not be selling this each year, so your returns would be higher, but I want to be conservative. So you're 30. What you find, just check this. Oh, sorry, your yearly contribution is 15,000, not 10,000. You're saving a little over $1,000 a year. At 70, that turns into $6 million. This was math that we did that finally we understood a roadmap. Of course, we don't want to save until we're 70, but it shows you how your money can compound and gives you motivation to actually put your money and invest it because it can grow at such a rapid rate. In total, it's also important to call out here, the amount that you invested by the age of 70 is you put in 100K, and the 15K a year means you put in $700,000 of your own by the end. That money, again, it comes to $6 million. So your money starts working much more for you than you actually have to do on the back end of every month. I'm saving more and more because it just starts to grow at a more rapid way than you will be able to save. So the return is nearly 10x. And for people that have got young kids, you know, it's this I think is one that like blew my mind the most. You have a young money. You have your child. You have a 5-year-old. Let's say you save 10K for them. You have 10K you set aside, and I think Israel gives you something like roughly, it's not quite $165 a month, but there's something that you do get for a child. You take that money, you just put it into this, and over 5 years it will turn to 10K. You never add any more money to it ever. 8% return, same exact thing. The results, we've seen the Excel, you guys will have the Excel you can play with. It turns into $1.5 million at retirement age for them. It's obscene how much your money can grow for you. And that's when I talk, I think Rivka did the same way, when we're talking about our love for the stock market, because once you understand this stuff, and these are regular vehicles, it can do tremendous things for anyone's life. I mean, the psychological benefits of your kids thinking, oh, you know, maybe I'm not going to wait till 70, but maybe I'm going to pull this out when I'm 40 or whatever, and I'm going to have a lot of what I need to buy a house or a decent down payment or things like that. When the upfront cost is just so, it's so small compared to what it grows to. In this case, it 150x the money. So you might be wondering, you know, this sounds pretty damn good. Why haven't I heard of this? Why isn't everyone doing it? And, you know, those three things I mentioned that got us really stuck after the crash was risk aversion, just being scared of stock market crashes and not understanding the truth behind the frequency and actually what a crash looks like, which we just talked about. Thinking it's just not possible. Maybe this is a scam. Like, what is it? What am I selling them? You know, something like that. Or I'm just not, that's not the life that I'm going to somehow get because I've never had financial abundance. So I just can't get it. You put it into this, it is a formula. And just don't have a roadmap. Again, when we were awesome, when we were at our bottom, we just, how do we actually get there? What do we do? These three pieces together start to give a structure of how you can build a financial future that hopefully gives you more insight than you had coming into the class. So the last segment I want to share, which I think is extremely exciting, is this part. So we've just been talking sort of about buy and hold index investing, which is it should be a core part of your approach. So your question might be, okay, well, you know, thanks for the class. I don't need anything else. So there's still some other aspects to it, and we'll start to get into some of those. Buy and hold is kind of like home ownership. You're holding it for a long period of time. There's capital appreciation, rent, trading. So stock trading is like flipping houses. There's short-term opportunities in the market. By understanding how trading works, it will empower you in your long-term index investing in a way that if you don't have this knowledge of sort of behind the curtain how the stock market works, you will just be in a different kind of category of investing, and your fear will not subside. Like these are like the mechanics to actually see behind the curtain. So for the last part here, what I want to share with you a little bit is how to start to see money hidden in stock charts. And once you see this, you can never unsee it. It's a beautiful thing. So in many cases, if you're looking at solid investments, like you're looking at buying an index of the NASDAQ or the S&P, or you want to buy Apple stock or Facebook or any of these great companies, assuming you're looking at solid companies, it's not always just what are you going to buy? What's the best stock? It's often when are you going to buy it? That can actually be a more important question. So how do we actually figure out? Because, you know, you don't want to be buying it right before the stock market crashes. That's what stops all these people. So this is a stock chart. Okay. This is for Spotify. The ticker is SPOT, you know, the music streaming service. I just picked, this is a stock. I figure most of us would be familiar with it. What this is, you see, this is a graph of, I think it's about 6 months here. And each of these lines on the graph represent 1 day of trading. We'll talk about the specifics in more detail, but just you start to understand, here is the price over time. In mid-May, it was down here at about 215, then it went up to about 275. So each of these is 1 day in the life of a stock. And a black line means that the stock made money that day, the price increased, and a red line means the price decreased during the day. So you can see, okay, had a nice run up here, okay, went down here. So that's sort of what we're looking at. And on this side, you can obviously see the stock price, and this is as of, I think, Friday. It's not updated today, but you know, hopefully that's good enough for everyone. Okay, so the question is, you know, for Spotify, when would you want to buy this? Clearly for me, I wouldn't want to buy it right here. Let me put on the annotation. Hold on. I wouldn't want to be buying the stock right here because it dropped a lot. You know, buying here looks pretty good, but how do I know it's not going to drop more? So really the question that we want to start to answer is how do we avoid buying at the top and selling at the bottom? That's a fundamental part of investing. So I want to introduce you. We're not going to talk that much about different indicators, but there's one that's a great one to be aware of. It's an indicator called the RSI. And the RSI stands for the relative strength indicator. And what it happens is you can see this red line here. Basically, when the stock price goes below this point on here, it means it's oversold. It means the velocity of people selling it happened too quickly that it's likely that the stock will pick back up. You know, for example, let's say there's bad news about some company or whatever, and all of a sudden everyone's like, oh my God, there's a huge overreaction in the market, because the market often has a herd mentality where all of a sudden someone says this is great and the stock price runs up like Tesla, like crazy. And then all of a sudden they say, oh, there's a problem, and it drops down dramatically. So often things can be overbought or oversold. So oversold here, it's indicating it's below this point that too many people sold it too quickly. So it's likely the price will go back up. On this side here in green is the overbought. It means too many people have bought it too quickly, and it's likely the price is either going to cool off and go down, or the price will go sideways and just sort of not go up from there. So on a very basic level, if I look at the RSI, what I'd want to do is I'd want to buy something. If it's a good company that I believe in the company, I'd want to buy it when it's oversold. And I'd want to sell it, or maybe take part of my position when it's overbought. In this case, this is a real-time indicator, and I'll show you the website to find it as well. This is not like I'm looking back historically. Every single day, it's saying right now, Shopify stock is neither overbought or oversold as of Friday. On this day, you could see in the thing, okay, it's saying it is oversold. Too many people have sold it. Here it's saying it's overbought. Maybe you want to get rid of it. Here, oversold, overbought. So it might seem shocking, but this indicator starts to actually give us an idea of maybe when we want to consider buying a stock or when we want to know not to buy it. Because a lot of people will hear about, oh man, you hear that new announcement about Apple and the iPhone, whatever, everyone's talking about it's got to be great. Usually that's when the RSI is at an extreme high, and then you buy it. And if you've ever had the situation where you buy it and the next day it drops, the next week, this indicator really gives you a lot of insight. So the next example is, I'm just picking like, an Israeli company I think is a great company, Fiverr. They do all of the services, or if you want many different things, you can find freelancers on it. So they IPO'd maybe a year and a half ago, things like that. So again, this is the RSI for Fiverr. So let's take a look and see what we see. Okay, so you can see that Fiverr is oversold here, overbought here, almost kind of overbought here as well, clearly oversold here. And also, maybe I would say this is not quite close, but you can see it still is really getting very close to the movements of the stock. So this starts to be a guide. And really, if people are familiar with the idea of Warren Buffett's like buy when others are fearful and sell when others are greedy, this indicator is almost like a practical version of showing you there's fear. There's fear in the market. Okay, now is a good buying opportunity, because that's what we want to be doing. As an index investor and a buy and hold investor, we don't want to buy the index of the NASDAQ when it's at an all-time high. We want to buy it when we can get at a price that seems where there's more upside. So Zoom is another one. Thank you, Zoom. We're using you right now. Just to breeze through these. Okay, you can see RSI low. You can see the extreme high. You can see the low again. Now, the second and final concept I'm going to share tonight before we wrap up is that there are some limitations. These are indicators, and they're not going to give you the full picture, but they start to give you some of the puzzle pieces, and we'll share all of the puzzle pieces. The issue you can see here is that there's actually multiple RSI extreme lows. So you'd say, okay, this theory sounds good, but like I would have bought now, and all of a sudden it's dropping, and it's dropping more. So the second thing I want to introduce is something called the 20-day moving average. What this is that it takes the price of the stock over the last 20 days, which is basically the last month of trading, because the stock market is open probably 22 days in a month. And it takes the average price. And what it really does is it shows you momentum, because it moves more slowly than the actual price. So when the 20-day moving average starts to move upward, and that's this blue line, that's the average, it's showing you that there really is a lot of momentum. The momentum of the stock is that it's going up. It's sort of like a boat. When a boat turns, it's slow to turn back. You see that it's not nearly as nimble as the actual stock price. Stock price goes down, it goes up. This is showing you the more macro movements. So we can use this along with the RSI extreme to start to give us very helpful information. With this one, we actually only want to be buying when we've seen that there is an RSI extreme low and the price moves above this 20-day average. So you can see here, okay, the price is moving faster than the average. It's a positive sign. This is showing that there's actually momentum for the stock. The same thing here, we can see the stock is falling and we see now it drops below this blue 20-day moving average. Okay, that's saying to us the momentum again is changing. So it's an indicator to help us figure out with more precision when we'd want to start to buy and sell. So with Spotify, it really comes down to very simple rules. And the hope with this stuff is that it should feel quite intuitive and natural. Rule number one, when a stock price is above the 20-day moving average, so it moves above it here, the price was below it. You can see the 20-day moving average is above, so it means momentum is down, and then it starts to break out and it goes above it. That is a buying opportunity. We'll talk with more precision of what that really means, but it seems, okay, there's something interesting here. There might be an opportunity. Here we see that example. When a stock price goes below the 20-day moving average, here we can see the price is now moving, it's below it. Here's the line here, and it's dropped below it. After an RSI high, it's a selling opportunity. You can see the same thing here. And in the case of Zoom, sorry, we were just at a second ago, that helps us because even though the RSI looks extreme here and looks good, we can see the momentum is still negative. So we actually want that second indicator of it going up and crossing it to show there actually is momentum in the stock before we would buy it. So just to look at a few practical examples, and I think we're just about out of time, but then I will open it up to questions and we can go back to everything. Sorry, I think I got a little bit carried away here. Okay, for example, with Spotify, if we just bought following these very basic principles that anyone could follow, RSI extreme, we buy when it crosses a 20, we sell. We see there's a $20 profit here from the 235 price up to the 255 price. And then again, we would sell it here and it goes down. We see momentum is starting to turn, so we buy it in this zone. We're holding it, RSI extreme up here, and then we sell it. That's also another $20 gain from 220 to 240. That is a 17% return. That's an awesome return. It's more than the market returns with just simply two, instead of buying it just once, you just buy it twice. Buy and hold returns in this case, you can see that the price that started at, actually it ended lower than that. So you were in the negative. So even, again, we'll be talking a lot about buy and hold long-term, but you can see that even in cases where the market's turning against us, there are very simple things that we can do to protect ourselves, even in those cases. And when the market's going up, it's even, the chance for profit is even higher. It's sort of easier to build more wealth than doing when the market's going down, but that's what we're seeing here too. Fiverr, same kind of concept. We bought it here, it got close, but didn't actually cross. Then here it crossed, so we sold it, and we didn't buy it again here because this was not actually at an RSI extreme. So we let it go. We're hoping that actually it'll go lower if we want to buy it again. It doesn't. So we don't buy it, we wait, and then boom, it goes low here, passes at this point, we buy it and we sell it. So the numbers we're looking at, you have from the first trade, you have a $45 profit, and you have from the second one, a $9 profit, which is a 28% return. And the stock itself during this period, and sorry, I don't mean to choose stocks that are not not doing so good. It was just the market with growth stocks lately has been a little bit up and down, but I just want to grab examples of companies that people would know. The stock has lost money, and the profit potential, when you start to understand tops and bottoms, you're sort of playing you're looking at it in a very different kind of way. So to recap, the RSI will tell you when to get interested when you see these extreme lows, or you'll tell you when not to get interested when you see the extreme tops, and help you to choose the tops and the bottoms. And the 20-day moving average will tell you when to actually buy and sell to help avoid false bottoms, as we saw. And this is just one of the NASDAQ as well. You can see.
Hey, I think we got just, oh, here he is.
Hey, sorry about that. Okay, I'm at the last slide here, so thank you for bearing with me here. Okay, let's see. There was one or two times where it said my internet connection got unstable, and I was like, I was getting a bit scared. But okay, so here, just to recap what we're going to go over in the class. Oops. Okay, so what we will the content of the class is, we will discover what your investing goals are for you, help you to find great companies to invest in, great indexes that match your investing profile, how to actually analyze things, technical and fundamental. We'll go deep into Israeli brokerages and pensions to understand what the pros and cons are of different ones, fees, and also with pensions. I think that everyone is actually a little bit like wowed and surprised, because pensions are a subject which a lot of people, they sort of like cover their eyes. They don't even want to see their pension because they're scared of how little it might be making for them. We will show you how to get yourself into some of the best performing pensions with like one change that, like, I think is going to be very exciting for people. Things to protect yourself in a downturn, and how to create a complete portfolio that's balanced for long-term growth, and also go into crypto, because what we will see is actually some of these exact same rules that we're applying to the stock market apply to crypto, and there's actually much more order in crypto than we might think from the headlines. And then the other part of the course is that there will be 4 mini project assignments, which will actually give you hands-on skills doing these things, with the idea of, I know someone mentioned in the beginning about wanting to manage your own investments and have that be empowered. These skills will make you actually start to do it. And that's the goal, that you can actually feel independently do it. And also there's a multi-part resource document with a lot of information that will help and things like that. The course, if you'd like to see more, the URL actually is the Stock Boss here. Just it has the same kind of recap of what's in the class. And the last thing is the format of the classes. We're going to have 5 weekly Zoom classes. They're 60 minutes each. What we want to do is we want the groups to be somewhat small, just so we have time to interact with everyone and give personal attention. So we're the first beta, this is our beta, is going to be just capped at 25 people. You'll also have access to all the videos for 40 days afterwards. If you want them for longer, we can definitely discuss. That is also doable. And the class cost is 499 NIS. It's the discounted beta class, so that price might change a little bit in the future, but for now, that's what it is. And then details to join for anyone that wants to join, because there's about 100 people here in the list. We want to keep this 25. Please just send me an email or WhatsApp, because I'm going to compile a list. I don't want anyone to just go ahead and send payment over Bit or Paybox. And if we and we'll also see if there's strong interest for a second cohort, we will open that up and also have maybe some additions with that as well. So I think that's it. I guess what I would just say is a very last point here is that I think that just being honest, if your goal is to try and make money very quickly with risky investments, I think that this class, I think there are strategies that will help you, but I think that you are taking on a lot of risk. So it's not something that this course is really intended to do. So I would say if you have a time horizon where it's like you need to make a lot of money for a down payment or for some large payment, and you need money and you need to be higher or a certain level, I would say that when you have a longer time horizon, 6 months, a year, something like that, it's perfect. If it's shorter and you're trying very aggressively to make money, usually people get riskier. And I think that building long-term wealth, that's not a way that is sustainable. So I just want to put that out there. I also want to mention that some people have asked me, are we going to talk about in-depth tax things? And we will talk about tax implications for Americans, for Israelis, and we'll talk about it high level and some of the key factors. But this is not an in-depth course about taxes, but we will talk about the things to avoid problematic tax issues that some of you have brought up. So we will cover it, but also if you're looking for a very deep dive, I think that in many cases you just need to talk to your accountant specifically, because that can be sometimes sort of niche, but the macro stuff we will talk about. Okay, so I'm gonna stop sharing now. And I wanna just open this up to any questions, and I can pull back up the presentation about questions. So if you'd like to ask a question, just unmute yourself and feel free.
Hi, I have a question.
Sure.
Do you live in Israel now?
Yeah, I live in Renana. We've been living here for about 7 years.
Okay.
And so
So
also,
that's how you
sorry.
become familiar with.
Yeah, all of the advice and everything that we'll share are things people in Israel, whether you're just Israeli, not just, but even if you're not dual citizen, if you're Israeli, if you're American, everything will be applicable. Nothing will be that all of a sudden you're like, oh, well, that's cool, but like I'm not American Israeli, I can't buy this or that or whatever. It will be, the content is that it will be universally usable.
And what is the price again? I didn't quite catch it for the class.
Sure, the price is 499 shekels. And there's 5 remaining classes. Each class is roughly an hour, but as we saw here, I think we went over, actually, I couldn't look at the clock during the recording because it was full screen. I was worried that I was over, but only 3 minutes. Okay, so it's 60 minutes and then
Okay,
Q&A.
thanks so much.
Sure.
Malcolm, quick question. Monitoring the RSI,
Yeah.
how much time do you think one needs to put in order to really monitor it and take advantage of it?
So what I would say is that by the end of the course, you should be able to manage your portfolio using the techniques that we talk about with, I would say, less than an hour a week. I think an hour a week actually is quite aggressive. Some people really get into it and they're like, oh, I want to look at it more in this. And what you'll find is that it's not always necessarily the more time you spend on it that your returns go up in proportion to that. I think that what we will do is we will lay in place a foundation with a lot of things that for most people will create a very good portfolio. Then if you want to play with it a little bit more, you can. But the idea with this is that it's something that it's like a very part-time side hustle. So I would say that once you set up your portfolio, I mean, you can look at it 15 minutes a week and it's okay. Yeah, so it's and I'll talk practically as we go, like what that means, if that sounds a little bit ambitious, but that's the goal.
Okay, thank you.
Sure.
Hi.
Hi. If people could turn on their camera when they're actually, maybe hold on, let me see. Maybe I'm, yeah. Thanks.
Hi. I just want to know for some, again, you've shown why we shouldn't be that scared of the stock market, but for someone that's starting out, what do you think is a minimum amount that's good to start out with to kind of, see how things go?
Sure. So it's a great question and something that people wonder about. My perspective is that it's way better to learn and make mistakes with $100 in investing than with $10,000 investing. So everyone, our first investments just lost a ton of money in the crash. We were starting it wasn't negative money, but it was that it's better to start off with a small sum, learn what's going on and feel the market. And in truth, this is a game for life. The stock market can create passive income for you and anyone here for the rest of your life. So wherever you start is okay, and a smaller amount is good, and it will take a while. It's a new kind of environment that takes some time to get used to. So there's no minimum, and in many cases you can also buy fractional shares. So what I mean by that is let's say that you want to say, I want to buy an index of the S&P, and maybe that index costs $300, and you're like, well, I have $50. In many cases, you can buy a fractional part of that share, which means you can say, I want to buy $10 of that share. And that's also okay. So even if you have a smaller amount, you can put it into a few different things with flexibility. And even though you didn't ask, the flip of that question, sometimes people will be like, I wish that I was thinking about this when I was 20 or 30 and I'm 50 now or 60 or whatever it could be. The same thing is also true. You know, like as we started investing, I thought, you know, I wish I was investing when I was 20 or whatever. And in the last class we had, there was actually a bar mitzvah boy, which I think is maybe the first age, like the youngest person that's been in a class where they actually have a little bit of money because they got it. So also wherever you start age-wise is also totally fine, because if it just makes you more money, just if you don't want more money, that's okay. But I think most people would want it. So yeah.
Okay, thank you.
Sure.
You were saying you are going to share the website for the RSA indicator.
Sure. So I'll share it right now, and also I can send an email after. So what I'll send also in an email after is I'm going to send a recording of the class, and I'm going to send that Excel sheet that I went through those different scenarios, because it's good for people to put in their own numbers and actually start to feel like, okay, well, what is my potential? The website that I use for looking at stocks is called stockcharts.com, STOCKCHARTS. And the default, you know what, let me just make this even easier for everyone. I assume you guys can see my screen here, yeah?
So it's not a free website.
No, it is a free website. If you can see
It
here,
says
this
1 month trial free.
no, but you can sign up for it, but you can also do the free version. I'm not recommending anyone in the beginning to do a paid version for this, and you can get all of the same kinds of things. So you can put in a company like, I mean, I just literally took these graphs from the stock market here. And this is it. So this by default has got, or maybe my default, we have the RSI right up here, and we can see this is it today. This is in real time what's going on. Stock's down 0.5%. You can see the 20-day moving average. I'll explain how to actually go through and put in some of these parameters, but anyone that wants to play around, and one of the first assignments is start to look at stocks you like and see whether this is actually true for them or whether it's not working out, and we'll discuss that. But this URL here is stock charts, and if I can, let me see if I can. Okay, I don't seem to be able to send a message to everyone, but you guys can see it, and I will send it in an email as the recap. And here we can see by default it's RSI.
Do you ever look at Yahoo Finance for, say, balance sheets or quarterly reports?
So what I do is, oh, sorry, I'm just turning off the share now. What we will go into, I'm not going to talk about it too much in depth now, but there are ways that we do fundamental research on company, looking at what analysts are talking about the company, so that we actually have got like fundamental research and backing behind companies that we think about. Yahoo Finance, I think, is a great site. I do use it. I think that for what we need to do in general, there actually are ways to get an assessment of a stock without having to go and look at their annual report or things like that, which I think for the average person investing in the stock market, that being a parameter where they have to look at those kind of things is a barrier that will keep most people out. Some people want to, and they can, and there's absolutely no downside to it, but I will show a method where we'll use analysts to help us to assess a company's value without having to actually read reports. But for those that want to read reports, there's just upside.
Can you talk about crypto again for a second? Because if you go by what you were talking about with the RSI and everything, logic would dictate that crypto is at an all-time high, and therefore it's not necessarily, like if you look at Bitcoin, for example, XBT,
Yeah.
you see that it's like $56,000 for one Bitcoin. And I mean, Dogecoin is like a little bit more like having more up and down movement.
Okay, so check this out. You can see my screen, yeah?
Yeah.
Okay, I don't want to go into it too much because they're as part of the second class, we'll see that these indicators of the 20-day moving average gives you part of the picture, but it doesn't give you a complete picture. And there's certain aspects I'm going to talk about that will fill in what those other pieces are. But we can see that some of the things that we're seeing around here, okay, so we see RSI extreme low around this level, which is around the 30, it's on this side, it maybe dips down to 30K, but probably around 32. It still went sideways for a while, but this gave an indicator that this could potentially be a bottom. We see RSI extreme here around this level. We're seeing right now, it's also right about at that point too. Again, crypto works a little bit differently, but there are also similarities. So So I guess on one foot, what I will say, because it takes a little bit more explanation. Like Bitcoin does adhere to several of these principles and the ones that we're going to talk about. The rest of the altcoins, which means every coin that's not Bitcoin, which is Dogecoin, Ethereum, all of these other ones, they are really moved by the price of Bitcoin. So Bitcoin will respect these things, but if Bitcoin starts to drop, a lot of these other coins will be much more volatile, and they can have an RSI extreme low that goes even further down. So I hope that gives a little bit, but I can't answer it responsibly without actually then showing a bit more, which I'm not trying not to show, but just the nature of us right now. That's sort of what we were going to share in this intro class.
Can I just ask a really quick follow-up to that? Like,
Sure.
have you personally bought any Bitcoin, and what platform do you use to buy it?
Sure. So I hold crypto. I think that it's becoming more and more important. I think that you have to do it responsibly because there's a lot of volatility with it. But I think that it's something that, and we will talk about building a portfolio, that should be something for consideration in a certain class of your portfolio. As an American, the way I buy it is with Coinbase. As an Israeli, you can buy with Binance. And also one thing that you can do is that you can buy things that are essentially like a proxy to Bitcoin. So things like there's a stock called Riot, RIOT, or there is Mara, MARA. These, not all of them, but some, also the Grayscale Trust, basically try to replicate percentage-wise how Bitcoin is performing. So for the average person that wants some exposure, unless ideologically you say, I want to hold and own Bitcoin, what people as an investor care about is I want the same kind of returns as I can get on Bitcoin. So if I have something that mimics the price of Bitcoin without me having to buy it, I can just buy on the stock market like Riot or like Grayscale, it can give you exposure without having to say, okay, I'm going to set up a Binance account or Coinbase, which if you're not a US resident, there are some limitations there. So those are some, we'll talk more about it, but those are the ways to make it accessible.
Can I ask you a follow-up question about the 20-day moving average and the RSI?
Sure.
How can you, meaning like, let's say you own 50 stocks.
Yeah.
You're not going to be and the 20-day moving average changes every 20 days. So you're not going to always
it
be
changes.
tracking.
It changes every day.
Oh, every day. Sorry.
Every day.
Right.
No, it's okay. It's okay. Yeah.
So you're not going to always be tracking all 50 of them. Is there some way to automate it?
It's very interesting because there's very few people I talk to that would have a portfolio of 50 stocks. If you do, there's nothing wrong with it. In fact, it's actually, if you don't want to buy an index, holding a variety of stocks like 50 is a very good approach because you're very well diversified. In many cases, to avoid doing that, people will buy an index, which, the NASDAQ, the QQQ, which is the index of the NASDAQ, holds the top 100 companies in the NASDAQ, so you don't have to buy each of the individual ones. If you are buying 50 stocks, I think there is a little bit of a discussion about if there's a benefit to doing that versus just holding, and we'll get into it, several different indexes, which would give you the diversification. But if you're the person that's actively buying 50 stocks, to me, that actually seems like you might be interested enough that you'd want to watch, that you're a trader, that you'd want to watch it. But in general, like, I mentioned a minute ago about Bitcoin. So, and how the crypto market moves with Bitcoin. Bitcoin is almost like a big wave, and when it goes up, all the little altcoins move with it. It's like it drives everything. When it crashes, it's the same. So if you have like the NASDAQ index, also it's the same. All of the technology stocks, they're not perfectly aligned with it, but they move sort of in tune with it as well. So what usually I do when I'm assessing individual stocks, as well as I'm looking at how the index of the market's doing. Is the index of the S&P at a low point? In which case, that means that all the pieces within the S&P are probably lower. Not all, but some are. And that on a broad way can say, okay, I'm seeing the markets dropping. I can see from that probably a lot of my stock holdings are also in a position where they're maybe oversold, or maybe if it's going up very high, that they're overbought. So that, even looking at just at that, can give you a shortcut to analyze this. But what we'll find in the class is that I'm not going to be recommending for anyone to have a portfolio of 50 stocks. I think it's a lot of maintenance unless you want to do it. And I think you can get very good returns with a simpler portfolio. Although we will spend time for people that want to actually have individual stocks, which I think is healthy to have some, and what balance that is as part of the portfolio.
Okay, thank you.
Sure. Do you, sorry, follow. Do you have a portfolio of 50 stocks, by the way?
No, not
Okay.
50. I'm debating if I have 25. I have to check. But how much, like, is there some way to automate like monitoring? I mean, I know you could set like stop orders and stuff like that, but if you wanted to like monitor and have it automatically update by the 20-day moving average, by looking automatically at the 20-day moving average and the RSI indicator and just know when to buy and sell, is there a way to do that? If not through a brokerage account, through something else that just alerts you?
There are ways to do it. I think what we will discover in the course as well is that there's a question about portfolio management. So again, if you have a portfolio that's, again, it's $100 worth of money and it's cut up, what percentage of that should just be in individual stocks? What should be in indexes of the market? And then we'll talk about like the other category as well. And I think what we'll find through the class is that the number of stocks, I think, for a nicely balanced high growth portfolio will be a smaller chunk. So your need to do that will be less, whereas returns will also still be very strong. In fact, there's a very common stat that in any given year, 70% of people don't beat 70% of fund managers. So people whose professional job it is to buy stocks and create mutual funds don't beat the market. And over a 3-year period, something like 90% don't actually beat the market, which again is this index of the S&P. So I think that I'm not saying don't buy stocks. We will talk about them. We'll talk about how to do it with strategic precision. But I think that what we'll find is that there's maybe a rebalancing in the portfolio that I think can also be helpful, which we'll get into details.
Okay. Thank you.
Sure.
Is your course designed for a beginner?
Yes. What this course should take you through is is an intuitive, simple system to make you fundamentally understand how the stock market works, and sort of any kind of investment that comes your way that's stock or what related, which means you'll actually be able to analyze how your pension is doing with a level of sophistication or these other things. And as I mentioned before, I've had some people, and I think even tonight, some people might be joined with their children. In the last class, there was a bar mitzvah boy. There was also a girl in her teens that was interested in finance. And the class, I think I try to give it over in a way that it should be accessible for anyone. I think under bar mitzvah age, maybe it's a bit too young and you wouldn't have money. So it's also kind of maybe less applicable and less interesting. But if you are starting out in your investing journey, there are many people that were sort of like, I think they were maybe overwhelmed by the market and also just risk averse and did not want to be buying right into a crash. This class is made for that kind of person. And I think it will take you to have more working knowledge that's applicable than 90% of people outside of professional traders that you'll see on the street. The average person you're going to see on the street say, hey, should I buy Netflix tomorrow? They'll say, oh, I don't know. Maybe they'll read an article and say, oh, sounds good. This is going to be a totally different level where you're going to be able to understand strategically how to make decisions.
And on the practical level, beyond the strategy and the understanding how the system works, how about practically, such as how do I physically buy a stock or things of that nature?
Sure. So we will go into, one of the classes we'll be talking about Israeli brokerages and also the option of international ones for the people that's relevant to. And I'll show you, I'll go into Israeli brokerages and show you the mechanics of like, okay, if you're going to do a market buy or you're going to put in different things, create a watch list. So it will be completely hands-on. And also pensions we'll be looking at those like not on a theoretical level, where you will be able to do all of this stuff. It's not going to take you to 90%, and then you're like, oh, cool, but now what do I do? We will dive into it completely.
I got a quick question. What is your perspective on age appropriate or age changing funds? Ones that change over the course of your life.
So I don't want to give an irresponsible quick answer. I think that what we will look at in the class where we talk about pensions is we'll look historically at how several of the different categories, including age changing pensions, have done over time. And I think that, again, with pensions, a lot of people just sort of want to like look away and they don't actually want to see because they don't understand, or, you know, just like, I don't think it's a subject that many people like. And the returns that a lot of people get on their pensions are, it's like a joke compared to some of the things that I will show you that anyone can access, but they don't actively try to get you to do because they don't get the fees that they get on a lot of these other pension programs. I think age appropriate ones can be okay. I think though that there is a real question about, you know, how bonds are performing, which a lot of the age ones, it shifts more into bonds over time. I think that we do need to be careful as people get closer to retirement that they have less volatility in their pension accounts, because you don't want to be doing it and the market crashes. But I think the short answer to that is I can't just say good or bad. I say I will show you a slate of alternatives that I think you will understand better ones and why, or how to craft something that fits your needs and your level of risk based on your how old you are and close to retirement.
Okay, thanks.
Sure.
I have a question.
Sure.
I was just wondering when you say that you
can
can.
people turn on video? Is that possible? So I forget to ask something.
Oh, I
so
have that option. I can try. I was just wondering when you say a brokerage firm that you can use to invest. So the bank that I use actually has an app which basically you can use to buy stocks. So what's the difference between that and using that and using a brokerage firm?
Sure. So like on one foot, the answer would be, one is how much the cost of a trade costs. So, you know, there's things like with Bank Leumi, I can buy a stock through Bank Leumi. The cost of buying that stock is ridiculous. I can use traditional Israeli brokerages like Meitav Dash, IBI. The cost of those trades on average are something like 30 shekels for me to buy and sell things. And there's other brokerages that are international ones, but they are also in Israel, things like Interactive Brokers. And there's some other ones that I'll share as well, where the commissions are $1, or actually some of them are free. So one is how much you're paying per trade. The other one are tax implications. So in Israel, because people by default don't file taxes, you know, it's taken out versus Americans have to file taxes. Non-Israeli brokerages do not require taxes to be taken out immediately. So for example, if I'm using Meitav Dash and I buy Amazon and I sell it for a profit of $100, the flat tax rate is 25%, whether I have the stock for a day or for 5 years, whatever. That's the basic tax thing. There's so much confusion about it. It's not that confusing. You're paying 25% if you're in an Israeli brokerage and they take it out immediately. If you're with one of these international ones, or even better for some folks, they have a brokerage overseas, like I use Fidelity because I had an account as an American, and sometimes you can still activate one while you're here. They do not take taxes until the US tax filing season. So for example, when in 2020, you know, Corona happened, there was some stocks that I sold. I sold some of them in February. And I paid taxes on those stocks in, I actually delayed it a little bit. I paid them in like July of this year. So the money that I made from those stocks, I was able to put back into the market and basically for almost a year and a half, make money from that money. Now, if I had Meitav Dash, they will take the money that I earned, they will tax out that part, and then that tax money is gone. So we'll lay this out in a way that's easy to digest, but there's tax implications and benefits of different ones in terms of ones that take that money right away and ones that you can have that money to reinvest for you and make more money.
Okay, thank you.
Sure.
I'm guessing with that tax discussion, you'll be talking about short-term, long-term schemes.
Yep, absolutely.
Yeah, I know in Israel, they don't have that issue.
Yeah, so where that really comes into play is if you're, like in the case of a US resident, if you're within the 10-year tax shield of Aliyah, then it becomes relevant. If you are here for more than that time, you need to just assume that there's a flat 25% tax rate. But again, you do have options, like you have the ability to work with international brokerages that will only ask, your taxes will only be filed at a later point. So even with that, there still is benefit of delaying taxes, but we'll talk about that, because there's also the question of, well, how much will that change the amount it's going to cost me to file my taxes? Is that going to be worth it or not?
Okay.
Is the course going to be on Mondays?
The plan is it'll be Mondays, 8:30 to 9:30. I think if the majority wants it another evening, we could, for me, that's also okay. I do want it to be an evening. I don't want it to be Sunday because the market's not open on Sunday. I want it to be either Monday, Tuesday, Wednesday, or Thursday. So because we will look at the market live. I think when people sign up, and basically if you're interested in the class, I would just say, please send me a message or an email, because it's sort of going to be the first people that show interest will make that first group. And then probably I'll just do a quick poll and say, hey, if there's another night you prefer, and if more people prefer a different night, then I'm totally fine with that.
Hi, Ophir here. Just a follow up to that question. Is there a starting date that this course would happen?
Next week.
And
why wait?
And in terms of the course syllabus, do you have something that you can share with us? Just kind of like what we would go over the next 4 or 5 weeks, whatever it is.
I guess on top level, again, this site, and I will share with you here. Oops, hold on. So this is the site, the Stock Boss. Sorry, not too many other URLs were available. It's not easy to find one these days. Talks about what the class will teach you, how the stock market indexes, crypto work, signals, strategies that you've got money managers use, create your own portfolio, Israeli brokerage, and upgrade your pension, just sort of some feedback from existing students. And then it goes into, it's kind of what I shared on the last page, or sorry, on a few slides before the end. It's in a nutshell, what the class is intended to do is take anyone that's interested in investing that either is beginning or also quite a bit on their journey, and really give them a deep understanding of the stock market. So they will feel very comfortable with it, and will understand how to invest and create their own portfolio that's diversified, and how to do things like protect yourself in the event the stock market is going down, how to do research, so you're also not just randomly choosing companies, and also practical things about, we will go into the brokerages, we'll go on a high level into taxes, we will go into pensions. I think that it's sort of the most fundamental actionable stuff, because beyond this course, then what usually I do with people that want to keep going more is that we do like advanced stuff where it's like we're live in the stock market each week, trading or buying, looking at things together as a group, and like really like it's just additional practice on top of this. So this I don't know, that's sort of what it should do, but it should give you a holistic understanding and ability to actively invest. And if you have a specific thing like, hey, will it cover this? You can ask me now, or you can ping me and I can share whether it will or will not.
And what happens if for some reason you miss a class? Are they recorded or
Yeah,
available?
all of the classes will be recorded, so you can watch the classes. As I mentioned before, usually what we do is we give access to the recordings like 45 days after the class ends for people that want to review it and stuff like that. I can extend that if someone wants. The only reason why we don't give it indefinitely is just a little bit, we're not like with, sometimes there's been people that share it with people outside of the class, and this is like that's not the most amazing thing when people do it. So that's sort of why we do it. We figure you'll absorb the material, maybe you watch all the classes again second time. There's a resource doc that will help you also with things, but there will be recordings after every class. You will get a recording of this in your inbox as well.
Thank you, Malcolm. I think that was super useful. And I just want to thank everyone for being here. We've gone till 10 o'clock. I think it's probably time to wrap up for tonight.
Cool. Thank you, Rivka, also for the great group you created and enabling this to happen. I think it's
you.
exciting for me. And thank you everyone also for joining. It's great to be with the group, and the questions are awesome. Okay, so great. So if people are interested in joining, shoot me a note, and then we'll be in touch in a day or two. I'll send out the recording and we will sort of go from there. Bye,
Thank you very
everyone.
much.
Thank you.
Thank you.